Good morning, everyone. This is your European Open briefing for Thursday, June 9th. My name is Michalis Florentiades. I am the chief economist here at XM.com. So, what are we concentrating on today? The Reserve Bank of New Zealand held the rates stable as expected, I might add, but the Kiwi still rallied, so we'll have a look at that. The Chinese inflation for May missed the expectations, so we'll talk about that as well, though that was not so important it seems. The US dollar remains under pressure in the wake of the jobs report last Friday and Yellen's speech on Monday, so no respite, not much respite for the US dollar. And on today's calendar we have, looking ahead, UK trade balance, US jobless claims, and Bank of Canada's Paulos will be speaking, Governor of the Bank of Canada. Looking at the Kiwi, as you can see, before the RBNZ announcement, the Kiwi was trading around 70 US cents. It jumped to almost 71.50. It failed to break through 71.50 though. That was a near 2% move. So the RBNZ possibly will cut once more. So it's keeping an easy bias. As we said, it could cut once more. So it also talked about focusing on the exchange rate. Now this makes it a little hard to see significant upside to the Kiwi, because as the Kiwi moves higher, the incentive will be greater for the RBNZ to cut rates, sort of to stop the exchange rate from gaining even further. So it's an interesting conflict, let's say, over there. Like, on the one hand, the RBNZ is not moving, the exchange rate is moving up, but if the exchange moves much higher, then the RBNZ might become more forceful. A little bit similar to the situation in the Aussie. Some parallels there also, that if we see the exchange rate becoming too strong, maybe the central bank may move. Anyway, I believe that risk on sentiment is also helping the Kiwi right now, being a strong performer, possibly also helping the Canadian dollar. We'll talk about that later on. And we might also mention that the Aussie tested the 75 cents level, but it failed to break through. Now, on to the Chinese inflation numbers. Inflation was softer than expected at 2% versus 2.3%, the expectation for May inflation. However, it was mainly food prices, and especially pork meat, especially volatile in China, a very important part of the diet there. So that was the main reason for the softer inflation. As such, it's difficult to draw any big conclusions from seasonal variations in volatile food prices. Now, producer prices were in positive territory, and that is also positive for companies as they are selling inputs to each other. So the fact that they have some leeway in raising prices is definitely a positive development that has taken place in the past 2-3 months. In addition, we can say that there is room for more monetary stimulus, given the fact that inflation is rather stable, low and stable in China. Now, on to sterling. We have to say that despite all the referendum brouhaha, the cable is holding relatively steady. Now, are markets rational in expecting a Remain victory? Are they carefully evaluating all the clues and coming up with this conclusion? Or are they complacent and victims to groupthink? That's a very interesting question. We'll have to wait for it to get an answer to that when the actual referendum takes place. So in 2 weeks time actually. So it will be interesting to watch if volatility will pick up. We had a very big spike, let's say on June 7, you can see it in the chart in cable. So we'll see whether we have this volatility, or generally if the swings are going to increase ahead of the referendum. We might also add that the soft US dollar might also be cushioning sterling a little bit. On to the US dollar, the greenback still has the jobs blues. The pressure on the US currency is continuing. The dollar index, index of 6 major currencies, trade weighted, is at 1 month lows following Yellen's speech. I may add, however, that maybe the market will increasingly focus on the presidential elections in November, and now that it seems that Secretary Clinton is going to be the Democratic candidate, that's become clear. I mean, of course she was a favorite, but I think now the maths are also have totally decided that. So we are setting for the Clinton versus Trump fight in November. So I think that political consideration in the presidential election is going to affect markets. Will start to evaluate this and see whether what each presidential candidate will have to say about the economy, what it will do, etc. Although with the current state of affairs in Congress it might not matter as much, but we also have congressional elections, so we will be entering the period of the US elections. Now I would also like to draw some attention to the Swiss franc. It has been outperforming the euro. It has posted some strong performance versus the dollar, but also it has gained a little bit versus the euro. So the question then becomes, is this the safe haven demand ahead of the UK referendum? An interesting question to think about, definitely. And it also appears that the Swiss National Bank may be keen to put off people from buying Swiss francs, so maybe they are also active in the markets. There is speculation about that as well. On to the calendar. As we saw earlier during the Asian session, we had machinery orders in Japan, a big miss, coming much worse than expected, the month-on-month figure, but the yen is standing well. The German trade numbers were better than expectations, the trade balance, but there was a bit also in terms of fewer imports and also a slightly better export performance than expected. We expect the UK trade balance later on. During the US session, we'll have the initial jobless claims expected to rise slightly to 270,000 from last week's 267,000. Given the jobs miss on Friday, I think claims will be closely watched, so I think that maybe they have a little bit more of a market moving importance than usual, so we'll have to watch, but otherwise it will be relatively quiet. We have also wholesale sales and wholesale inventories today out of the US. Finally, we'll also get the Bank of Canada, a review of developments in the financial system, and also the Bank of Canada Governor Stephen Poloz with the Deputy Governor holding a press conference. I think that will be watched, especially since the loonie has strengthened recently. It's trading below 127 versus the US dollar, and oil is about $51 a barrel. The US dollar is soft, so US dollar Canada heading down. So that will be interesting. Thank you very much for watching today, and have a great day.